Good morning, folks. This is Tuesday morning, the 11th of February. This is a chart of the S&P 500. Now, somebody asked a question. I mentioned in a video yesterday the importance of point Bs in an A, B, C, D move, and so I'll just try and explain a little bit why a point B is so important in terms of a support or a resistance level. Here's a chart of the S&P 500. If we just have a look at this, we've completed this ABCD off the low we made in December 18. That's completed just about spot on. It might have gone a tick or two higher. So that's right in the zone. If this pattern fails, there's another one off the 2016 low that comes in. There's the 2016 low down here. That comes in at 34.60, I believe. Up here, 34.60, 34.50, 34.60 area. So it could push up one more time to complete this larger ABCD. But if we come down the time frames and have a look at this 15 minute, I've actually got the 15 minute that I did this morning. Unfortunately, I didn't save the chart, so I've got to do it all again. Well, that's the daily. So there's another ABCD pattern completed there on the daily. That's come right in this morning. And that one, of course, that's one off that we've just seen. Now, if we have a look at the 15-minute chart, if I can find it, here we go. Now, you can see we've completed this butterfly from the high we made at the beginning of February. This is a 15-minute chart. There's your beautiful ABCD. Your CD legs expanded by 1.618. That's coming absolutely on the money, right there, as you can see. There's a nice 3 drives to a top pattern, drive 1, drive 2, drive 3. Rather slim and stick insect type pattern, but it's there. And then, of course, your ABCD is part of your butterfly. That all comes in, just made a new high. And you can see, we've just gone into range overnight. Now, if you look, if we just have a look at what's happened since this was done at sort of 5, 6 o'clock this morning. Now, let's just have a look what's unfolded right now here on the 15-minute chart. And we can see that this is the price action that's unfolded. This is the high we made. It came down, made a higher low, and then we made, if I just change to this screen, I've got it better on here. Right, here we go. So we're in an uptrend, making higher highs, higher lows, higher highs, higher lows. And here we are, we've made the high. And let's just zoom in a little bit, we can see that we made a higher low, and then we made on, and then you see, notice we made a lower high, the first lower high that we made since this market rifled up yesterday. Once we took out this higher low, we completed an A, B, C, D. And you can see the importance of this point B because we've now changed the sequence of higher highs and higher lows, haven't we? Because we've now made a lower high and a lower low. Now, the only way to get back into this uptrend is to get back above this point B, isn't it? We've got to get back above this point B because that is the structure, that is the price structure which is defining the uptrend. At this point in time here, before we've gone up here, at this point in time, it's just a support level. But once we've made the lower high and then come back down and take this low out, this becomes an important level of, it's because it's defining the uptrend. And you can see we broke down, we tested it once, twice, 3 times, 4 15 minutes, that's 1 hour, over an hour's trading, folks, a 15-minute candle. Then broke down, now we're back above it. Now here we are, we've closed back above this point B again, as you can see. So you can see the importance of this. Now, if we can stay above here, take out this high, that's more or less telling us this uptrend's back on track again, isn't it? So that's what we're looking at. So that's why point B is important. Have a look at another one. Just look at one. I think there's one on the German Dow. See what might happen now. You might find it'll to and fro a bit around this level now. This is an important level. So there could be a bit of a tug of war goes on around here. Look at the Dow for a minute. Just have a look at that one. Again, this is a similar thing. Instead, you see the Dow made a higher high. whereas the S&P made a slightly lower high. The Dow just pushed up and made a higher high. But it's come down A, B, C, D. Now we're back above point B on this occasion, aren't we? Quite easily. But it did test it, pushed through, couldn't get through, then it finally broke through. Now we're back above. But we are we've made a second lower low. If we can't get above this point, this second one, it's sort of a 135 pattern, but there's no, not quite the time symmetry for it, is there? But it's still making a lower high, so you need to keep an eye on it. But that defines a change in trend. So I like to see at least 2 lower lows and 2 lower highs. And then I'm sort of thinking this could be a trend change. 1 lower low, 1 lower high is just an A, B, C, D in an uptrend. So what you want to see, so your point B is your support, and your point C is also important because that's your lower low. Get back above point C, and that just confirms your trend's back on track again. So I hope that makes sense for you, and worth keeping an eye on these. We could, because I say these patterns have completed on the some really powerful reversal patterns here. Whether they work or not, of course, folks, we don't know, but we'll wait and see. Keep an eye on it. Anything can happen, folks. So hope this helps you. Take care and good luck with your trading.